All right. Well, hello, everybody, and welcome to Replace Your Income with Kevin and
Steve. How's it going, Kev?
Well, Steve, we are really excited to announce our new brand partnership.
Coca-Cola has decided to endorse us.
Yes.
And are we allowed to do that?
Yeah. No, I don't know, but we're doing it. No, Diet Coke and Coca-Cola has not endorsed us, but we think they should.
I think they should send us gazillions.
I think that in theory, they would endorse all the things we talk about here because we're awesome. So I think that that makes it like a sort of tacit endorsement, right? I think does that make sense? Yeah. For those of you just listening, you missed a perfect view of Steve showing off his Diet Coke. Well, we are excited to be here. Now, this is going to be a little bit of a bonus episode. So Steve and I were talking about something that our clients have really been, we've had this conversation a lot recently. Look, you know that we come on this podcast and we try to do a few things. Like, number one, we always want to be giving you sort of fresh market information, right? We know that even though somebody may be listening to this podcast 20 years from now, for those of you who just downloaded it today and you're listening to it, you kind of want to know what's going on in the market right now. So because we are very actively doing real estate deals on the regular, we are kind of always in the midst of these transactions and understanding the ins and the outs of how we're getting deals done and what we should be doing in any given market scenario. And one of those things that's been coming up a lot lately, because we've seen interest rates continue to climb as we sit and record this today. I think that the average interest rate on a 25% down payment single-family residence is almost 8.5%, right? It's like 8.375 or something like that.
On an investment property.
On an investment property, not on a primary residence, on an investment property. Now, Steve and I have told you 100 times that is not a high interest rate. It's just higher than they were, but it's closer to normal than it was during COVID when we had 2 and 3% interest rates. But nonetheless, an 8% interest rate is still higher than a 6%, higher than a 5%. And so people obviously are concerned. Now, we also know that smart investors are buying right now. They're not waiting because now is always the right time to buy. But we wanted to give you a little bit of the ins and the outs of what should you be doing? What are we doing in the midst of these real estate transactions when it comes to working with sellers and getting some seller concessions and looking at the potential to buy down the interest rate on a loan to make an investment purchase just makes sense. So Steve, I'm going to turn it over to you because this is really kind of, I don't know, it's you're in the mix with these transactions far more than I am. So let's talk a little bit about kind of what's going on and why would somebody want to buy down their interest rate? Why would we want to get seller concessions? And what is the impact on an investment property purchase if we go that route?
Yeah, and to provide some context, the reality is interest rates today hit a 20-year high. So from a short historic period of time, interest rates are higher than they've been in the last 20 years.
Yeah.
And that is significant. If we back up time, if we go back 120 years to the beginning of the 1900s.
Go back 40 years.
Yeah. We are historically right about there. Yeah. When you look at averages. Now, regardless, the interest rates being what they are, it is tough to buy real estate today because payments are significantly higher, whether it's a primary residence or whether it's an investment property. One of the goals that we have for each of our properties is to make sure that a property has positive cash flow. We've talked a lot about the idea that cash flow of the 4 different streams of income that single family properties can bring or do bring. Cash flow is the least among them, but it is still very important. It's still critical. And so one of the goals and objectives that we have is that we have minimums for every property that our clients buy. It has to have positive cash flow. It's just part of one of the principles that we strive to adhere to. There is an argument, like you've spoken about in the past, that there is an argument for having negative cash flow.
Right.
But we've just chosen to kind of draw the line at having positive cash flow is one of the benefits that we bring to the table.
And to be clear, when you look at our 10-year property pro forma, that does not necessarily mean that an approved property will have a positive cash flow in year one, right? You may be just a couple dollars negative in year one, but we're looking at the averages on the property. I just kind of wanted to clarify that.
Yeah. And so now, having said that, there is a way to mitigate the 8.375 or higher interest rate that you might be facing today. There are ways to lower the rate. And I think that everybody understands and knows that, hey, you can buy the rates down.
Yeah.
But we go about it from a little bit unique perspective based on what's going on in the market. 2 years ago, could you ask a seller for concessions and to ask them to buy the rate down?
No way.
Absolutely not. In fact, the reverse was happening.
Yeah.
They were asking for extra money.
Yeah.
And so with every market, you have to kind of tailor your offers to what's going on. And so what we're doing on every single offer is we're asking for seller paid concessions up to 2% of the purchase price, because that's what you can do from a lending perspective. They allow that. And so, on a $300,000 home, you can get about $6,000 in concessions if the seller is willing to pay a 2% interest rate buy down for the buyer. And so in today's world, as of this week with our lender, it's costing about $7,500 to buy an interest rate down by 1%. Now, that's a lot of money, but if you get the seller to contribute 2%, that's about $6,000.
Yeah.
And so you want to get the lowest rate possible. So that's the first thing that you do, number one, right? To get that interest rate down from, that 8.375 down to hopefully into the low sevens or lower.
Yeah.
And so number one, the seller can help out there. Number two, if you're a buyer of either a primary residence or especially if this is an investment property, one of the greatest investments you can make is to buy the rate down from your side of the transaction to the extent that you can. There are diminishing returns. The more money you spend, you're not just going to get dollar for dollar lower interest rate. So you got to kind of find that magic number. And so you may spend, another several $1,000s. But let's say that you get the seller to buy it down to 3/4, and let's say that you're going to buy it down an additional 0.25 or even lower, another half a point. And let's say it's going to cost you, $4,000 to buy the rate down so you get a full point discount. So now you're at 7.375, which can get you above that break-even point to where you've got a little bit of a positive cash flow, especially when you extrapolate it over 10 years. So we like to look at it from the standpoint of this is not a cost. A lot of people think, well, gosh, like I'm gonna have to spend $4,000 to get the rate down. Like I don't want to have to come out of pocket. That's going to be this big expense. Let's look at it from this standpoint. If you were to spend $4,000 and that increased your cash flow by, let's say $75 per month.
Yeah.
So 75 times 12 months, that's $900. And if you spent $4,000 to get that $900 of increased cash flow,
divide that 900 against the 4,000
that's a 22.5% return on your investment.
On that
Kev,
money.
If I came to you and I said, Kev, if you'll loan me $4,000, I'll pay you 22.5% interest on that loan.
I'd be like, okay, let's go.
Right?
Yeah.
So that's going to be one of the best investments you ever made.
That's right.
So that's the way that we like to look at the interest rate buy down from the buyer side of the equation, is looking at it as an investment. I'll share a personal story. A couple of years ago, I refinanced one of my properties. It happened to be most of my investments are single family homes, but I do own a fourplex. And I refinanced it a couple of years ago, and I wanted to buy that rate down, which I did. I got a fourplex down to 2.99%. It was back in the day. I had to buy it down quite a bit. I spent like $12,000 to do it, but my savings was $435 or $450 per month, which means my cash flow went up by $450.
Yeah.
And so when I extrapolated that out, it was like a 36% return on investment.
Yeah.
So from personal experience, like I've done that on my properties, and it's been one of the best investments that I've ever made from that perspective. And so this is the idea, this is the concept that you don't always have to just accept what the market is giving you.
Right.
You can get a little bit creative. You can get a little bit, depending on what the market will give you on the front end. If the market is such that a seller would be willing to contribute, bam, that's bonus number one. Yep. Bonus number two is your willingness to see this as an investment. And when you combine those two, it can be very powerful. You can buy your rate down by at least 1%, maybe more than that. For about $7,500 in today's market. It's the middle of October 2023, and so it's just a it's a philosophy, right? Of looking at how do you look at a challenge and turn it into an opportunity so you can keep moving forward.
Well, and I just to comment on that, just using the word like you did, investment, instead of expense or cost, makes a huge difference. And that would just be a little recommendation I'd give to anybody as you're experiencing your real estate portfolio. Don't have something be a cost, have it be an investment, because what it does just in your mind and the way you interact with it and what that does for you energetically is such a drastic shift. Because if you're looking at it as what do I have to pay? What's the cost to buy down my interest rate? There's this negative energy that's attached with it. When you look at it as an investment and then you put it in you put it into numbers in the way that you articulated it, Steve, and you're looking at the return on that investment, all of a sudden it makes sense. And so that is the shift, right? It is a paradigm shift and a mindset shift.
What chapter is that in Micro Wins to Millions?
The paradigm shift was chapter 7.
7.
Yeah, that's right. Gonna remember. Look, there's been a lot of writing that's happened in that book.
So that's such a powerful concept, right? So being able to get yourself to see something in a slightly different light, a different perspective, allows you to move forward in a very powerful way. And if you at this point, hopefully our listeners have watched my 5.5 minute video on the market today. It's like today is a fantastic time to be buying. You don't want to miss out because it's like you see that interest rates are 8.375, so you go back to bed and you don't take action. And the reality is, if you looked at things a little bit differently, you took advantage of this front end and back end interest rate buy down, you get to move forward and actually not lose out on the opportunity cost of as much as $50,000 in as little as 3 years.
I'm glad you said that, because I was just going to remind everybody there is an actual physical real dollar cost to not taking action. So if you can look at it and say, if I can get seller concessions, if I can contribute and invest a little bit to buy down the interest rate and what my return on that activity will be, now you're also, it's not just the return on, in your example, you put $4,000 in and your return was, 20-something% with the 900 in increased cash flow or whatever. It's not just that. It's that plus, if that's what got you off the bench to buy the property that is going to increase and appreciate $30,000, $40,000, $50,000 a year for you, plus all the other additional benefits, that activity, that action has a real dollar consequence in either the positive or the negative for you. And if it can help you get off the bench and dive in, that's why we want you to do it. And so that we thought we'd just jump on and do a quick bonus episode and give you those principles. If you have any questions, if you are a client and you have any questions on what that looks like, contact your coach. They can talk you through it. If you are not a client and you're like, I want to learn a little bit more about that, I highly recommend you go to the YouTube channel, go and take a look at Steve's 5-minute video. If you haven't watched it on why invest in the market now, feel free to reach out to us at the company, and we are happy to talk with you and share whatever we can with you. Hopefully it'll be beneficial and impactful. We hope this was a good, quick little episode and it shifted your mind a little bit and that it has you taking a little bit more action sooner than you otherwise would have. That's all for now. Any last things you wanted to mention, Steve?
None at all.
Okay, we'll talk to you guys soon.
Take care.